CBA said it would repay fees charged to dead customers, which of course seems way too late to get the brownie points with those particular customers. Our exclusive polling today also showed, though, that the extent of the damage to the bank's reputations has been very broad, and CBA has actually been in the firing line, as we spoke about with Leo Shanahan a bit earlier. Yeah.
Well, with all that in mind, let's bring in our panel tonight for Taking Stock. And luckily we're joined by Christian Haig, Senior Director at eBay Australia and New Zealand, and InvestSmart's Chief Market Strategist, Evan Lucas. Thank you both so much for joining us in the studio. We're talking banks. Do you think that there's anything that they can do at this point, or do they just have to kind of hunker down and just wait for it to blow over? What do you think?
Yeah, it's a really troubling time for them. I think it's a really critical inflection point, you know, not so much a breaking point, but they've got to make some serious decisions about the fundamentals of how they operate and how they deal with their customers. I think for too long they've been looking after and maintaining their customers in an archaic sense of old school retail banking, when clearly consumers and consumer expectations have moved faster than what they can. And that's being exposed by the Royal Commission and by the backlash they're seeing from consumers.
Your background's marketing and advertising. Do you reckon they can spend their way into recovering their image? We've talked about a lot of advertising dollars being spent. Is it too soon, do you think?
Yeah, I've got no doubt they could spin it, but that's the problem. They shouldn't spin it. I think they actually have to solve the root causes, and that's the way that they operate and the way that they turn up for their customers, how they deliver their products and their services, in order to truly engage with them and build some of that integrity back into financial institutions and the industry as a whole.
So what you're really saying is they need to lean into it, and that's basically the whole idea of what we're sort of alluding to across the board, is that the banks have to lean into what has happened, particularly over the last decade. Let's be honest. I mean, from my perspective, I obviously come from markets rather than from the marketing side, and we always talk about the triangle, and the triangle is shareholders, lenders, creditors. Now, creditors are things like term deposit holders, etc., inside the bank. We all know what lenders are. The one at the top, and the reason I deliberately put it here, the shareholder has clearly been the one that most people will probably point the finger at as why they've behaved the way they've behaved. Now, that's not a good enough answer, let's be honest. Let's put that straight out there. That's not the good answer, because
actually, most Australians are shareholders in the banks too, and we haven't demanded this, have we?
Yeah, and we are shareholders in so many different ways. If you've got a self-managed super fund, an industry super fund, a retail super fund, doesn't matter.
You can't avoid them, can you?
You are exposed. You will be therefore involved. So this is the push-pull. So I agree. The lean-in is there, in that they now have to look at it, not only that, not just from a marketing perspective, but how do you now grow the business after an issue like this? Because demand for their products clearly are moving elsewhere.
The problem seems to be that they're not leaning into it, and they're acting like nothing has happened, certainly from an advertising perspective. I mean, I was kind of going into offices to cover this, and on my way in I would see billboards just plastered everywhere, from ANZ, where your first home, buy a coach, all of these sorts of things. There's just no real kind of moment, which there has been with other companies in big situations, like when there was that huge oil spill in the Gulf of Mexico. BP came out, huge advertising campaign, we're sorry, we really stuffed this up. Do you think that that's what needs to happen?
Anna Bligh from the Bankers Association, though, I think, you know, it's a dark day, or whatever the terminology was. That was kind of fairly grim. She kind of wrote the headlines for us that day, I thought.
I think the other way to look at it also is, you've seen, and I agree to some extent, they haven't actually necessarily moved right into it. So you have seen NAB's the one that really has to probably embrace it the most, because they are the most exposed to this issue. And Andrew Thorburn, the fact that he didn't raise the standard variable rate, where the other three did, with what's going on the other side, shows that
the mortgage rate.
The mortgage rate.
NAB's just trying to stay out to the side.
So they're trying to show that we are now listening. Now, I would somewhat agree, because in the end, though, everything in terms of status quo seems to still be there. They have clearly ramped up the way that they now interpret a loan. So if you go into your NAB branch, your ANZ branch, blah, 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 they're going to ask you, how many cups of coffee do you have a week? How many times do you go down to the picture theatre? How many times do you do this, X, Y, Z? Plus, what's your earnings? Plus, do you have a car loan? Plus, the insurance on that. All of those total up, and it's now reducing the
funny thing is that people are going to be annoyed at all that, though, isn't it?
It is putting more complexity in it for the consumer to solve for their underlying root causes. I do think, to your point, your question, that there's an opportunity for a change agent, for one of those banks to really step up to the plate and change the operating system and use leadership in the industry to bring others along, because they're not going to do it collectively, you know, or in incremental steps by themselves. There needs to be discontinuous change in that industry, and one of the banks needs to step up and do that.
Out in the market, though, we saw some really interesting new figures exclusive to Your Money today, which show that younger Australians are kind of letting the banks off the hook a little bit more in terms of how displeased they are, and older Australians, the correlation is that they are much, much more unhappy. I mean, speaking as somebody who's high up in a company, can you appeal to all kind of age groups at once, or do you kind of have to pick where you point?
I think that's the job of businesses and retailers and even in banks in today, is to make sure that they have a personalised strategy that targets the different consumers that use their products and services. You've got to decide in some cases whether or not you want to be niche and you want to go over a particular generation or a particular target customer. But if you are servicing, and in the case of major banks who have been around for so long and who have a breadth of customers across different generations, they need to tailor their products, their services, their engagement strategy, the way that they communicate, the tools and services that they offer to different types of customers.
You've got to just try a lot harder.
Probably the next question on that is what we've just been talking about with regards to banks, and what you're suggesting there, Christian, is there's opportunity elsewhere. I mean, for companies like eBay, payment systems are obviously quite an interesting thing. I know that you can talk about things like payday lenders, like Afterpay. Does eBay see the rise of that kind of thing as the future, particularly targeting that lower age group, so probably under the 45 band these days, as the future, or are they still using normal sort of payment structures?
Well, no, the fintech industry is booming. There's a huge amount of venture capitalist funds and investment going into that space, because we've seen the likes of Braintree, PayPal, Afterpay, etc. explode across the world, because the youth of today and the younger generations who are more technologically savvy are taking that up because of, to your point, the ease of use, the barriers to entry, the operations that they don't have to go through in the traditional retail banking system. And so the more options that are available for the banks, the more threat there is, because there's little slices of consumer spending, and investment and loans that get taken away.
Well, the only thing from my side, I'm going to add to it, because very interesting from my perspective, the question about this going forward is the term we use is risk, right? So there is always the possibility of all of these fintechs are fantastic for the ability to consume, great, but there is risk. And the build-up of personal risk in terms of consumption, personal risk. So an Afterpay is a clear example. Braintree is another one, where the ability to actually get hold of credit like that can actually add another level. And that, I think, is the only question going forward, is do we see that build-up actually start to come home to roost?
Yeah, that's hotly debated right now. Do you have a view on that?
Well, no, it's exactly right. You don't want in that industry or in the fintech space to get to the same problem where the traditional banks have got to, which is really overexposing its customers through its own processes and systems. And so they can take the learnings from the traditional retail banking system and make sure that they apply it in the way that they build their products, their services and their offerings moving forward.
Can we talk about the Opera House with you guys? Maybe a bit outside of what you normally talk about, but you've watched it along with all of us. So we've got the lights on the Opera House tonight, in fact. So we'll see what all the talk has been about. Have you got a view on it, Christian?
Yeah, I'm not a fan. I'm a huge lover. I've just spent 7 years overseas and come back to Sydney and to Australia, and the Opera House is one of our most iconic heritage items, and I think it should stay that way. I think that in this case, it's probably a case of, is any publicity good publicity?
Well, I'm kind of wondering, after all of this, is it actually good exposure, or is it all just too tarnished now anyway?
Yeah, well, see, I get to sit here and go, and I know, Chris, you can do the same thing. I'm from Melbourne, so this to me is amazing, because we hear all this stuff. Look, I'm actually with Christian on this. I think things like the Opera House are a little bit sacrosanct, but in saying that, Melbourne embraces that all day, every day. If you look at, Flinders Street Station, they'll have the Melbourne Cup advertised.
No one cares about Flinders Street Station. It's not the Opera House, come on.
I understand that, and that's what I think from my perspective, or at least from an outside Sydney perspective, it's, okay, yes, it is an iconic icon, I agree, you probably shouldn't be putting something like that on there, but at the same time, it is, I think there's been a lot made around this. I agree, this is the question. It's gambling, right? Do we want to be representing gambling on a national icon? No, we don't. Do we want to use it for other things, to put material onto? I'd probably suggest that we do.
Hang on, would you have a problem if it was the Melbourne Cup race, though, being projected onto the Sydney Opera House?
Well, that's the question, isn't it? Because the Melbourne Cup,
like
you could ask a
it's
tradition.
a disruptor to the space,
Yeah,
right?
it's a tradition, and I don't think I'd want the Melbourne Cup on there because, again, it's Melbourne. It shouldn't be associated with that idea.
The thing, of course, is that the Everest has kind of achieved everything it hoped for and much more with all of this. Alan Jones going off about it, everything like that. I mean, surely eBay would be pretty chuffed if it decided to put something up on the Opera House and then wasn't allowed to, and then the news cycle went nuts with it for a week. I mean, this is the best thing.
No doubt.
Right?
If the objective was to get more people to know about the event and that it's happening in New South Wales, that it's happening in Royal Randwick, job achieved.
So the question is, will you watch it? That's the question, right? In the end,
I'm already sick of it. I haven't even seen the thing.
Yeah, in the end, that's the question, because I think that's the whole point of this, right? Is that in the end, they are trying to force this into the market, right? This new yearly race, richest race on the planet, blah blah blah. Will you watch it? I don't know if you will, because again, there is something about it that just isn't there. I mean, I can only name one horse.
Something about it is just kind of didn't pass the smell test. Like, what's going on? When was it decided?
So late to the party.
Yes.
Why is this happening at the 11th hour?
Yes, I think.
Why wasn't this debate
We feel like they don't know
with the
what's going
community earlier, so that it could have been more protracted and maybe more informed? But it feels like a bit of a knee-jerk, last-minute. Oh, we've got to do this, and it's caused the uproar.
You did spend many years overseas, 7 years, I think, from what I read from your bio. Do you find it all though a bit of a storm in a teacup, or is this worth debating this type of stuff?
It does set a dangerous precedent, I think, particularly in this scenario.
Oh, speaking of, let's just throw something up that I saw on Twitter today. Talking of dangerous precedents, I almost forgot I prepared this. Cue Clive Palmer putting up his little idea for what we should have in the Opera House. If we can use it, we will. Can you imagine that?
Bit of a master of advertising at the moment. He spent $1 million last month alone on putting himself out there.
But doesn't that make the point?
Yes.
Yeah, it does.
That makes the point.
It makes the
exactly
point
what we're saying.
that
this sets.
Where does it stop?
Christian said it. This sets a precedence that goes to another level, and I think even outside of Sydney, Australians will just understand that the Opera House is something different. It is not like putting up on an everyday government building. This is something iconic, and I think everybody can see that.
Yeah. Speaking of iconic, there's also been some suggestion that the money mistakes that we make before 30 haunt us, or haunt half of all Aussies for the next 20 years. So we kind of got to talking about this, back there, and we're sort of comparing secrets. I mean,
it's funny how
truth time.
Being under 30 is such a crucial stage in your life for actually determining how you view, various aspects of money and your finances in your life. You guys got, You've got something.
What do you think?
I'm in markets and I work in markets, so I absolutely have stories. I mean, when I took a research piece of paper as gospel, backed it to the hilt, put a fair amount of money for a 24-year-old at the time, and it was a speculative mining play back just before the first China issue, and lost all of it. And it was laid out.
How does it haunt you?
Oh, it haunts me the fact that it haunts me the fact that it shows very clearly that this is why, from my perspective and what my company does, diversification is key. That having your eggs in one basket, even if it's just one stock or a portfolio of 5 stocks, what have you, is always going to end up in trouble for you, because you're going to see structural volatility, blah, blah, blah. And that's what I lost a very reasonable amount of money. Even though I was selling out as I could, I backed somebody without doing my own research and backed. And it is why I went into this industry to go, I will never ever do that again. To other people.
Well, it sounds like a kind of a good lesson to learn. I mean, 20 years though, what do you think? Have you been haunted by something? Yeah,
so mine would definitely be, and this applies to everyone at any age group, is the value of compound interest. And that idea of, from a young age, when you finish school, that money that you invest, reinvesting the interest that you earn. And if I think about, the couple of grand, that maybe I could have saved when I was 18, and what that would look like today, it makes me shudder. I think, and so, as far as a long-term investment strategy goes, starting young, that benefit, the multiple, is huge.
I'm going to interrupt there. If you actually had to put your money in the ASX, just as the ASX itself, in 2000. So the year 2000. So we went through the GFC, the European shock issues, China in 2013. On total returns, you would have made 420%.
Okay, so if you put just a dollar in the share market, you would have
made 420 bucks. Because of just rolling over, reinvesting it all back into the market. it would have managed to go through the GFC, the Euro issue, the whole bit, and still returned you that level of money. That's from 2000, so 18 years ago.
I think I've got a similar story. When I was younger, I put way too much trust into a financial advisor. And being a very trusting person that I tend to be as a personality, I think I maybe should have done more research instead of just assuming other people have my best interests at heart. I felt quite vindicated personally with the whole Royal Commission and some of the things that came out of that, because really, like, that showed to me, yeah, trust people, but no one actually has your interests front of mind except for you.
Yeah, sure.
And you really do have to take control.
Dot your own I's and cross your own T's.
Yeah, and you know, I'm very careful trusting people with my finances now, and picking the right people. Like, I'm really going to have to give people a grilling from now on. I probably didn't give them too much of a grilling when I was in my early 20s, when I thought I was being so sensible. But yes, I think, yeah, that's probably mine.
Yeah. All right, fine. Well, if we're all going around, I've got 1 month left before I turn 30, but still, I'm going to be haunted, I think, for the next 20 years about not getting into the property market 5 or 6 years ago before things really went bananas. I mean, just to sort of do anything that you could to get in somehow, you know, just before things went nuts.
We were talking about before about funding. Yeah. The funding of mum and dad.
Well, it's a tough one. I mean, I've read recently that it factors in for 50% of first home buyers, and when cash is involved, it's upwards of $80,000. So this is an incredible
and the reason I asked that is because I did it. I had to swallow my pride and go, I knew in 2013 that if I didn't go then, I would never have got in. And I didn't want to. My wife and I worked incredibly hard, but it's just the stamp duty and the fees and blah, blah, blah. And I was like, I'm going to have to go. And I had to go to mum and dad and borrow from them. And I thankfully paid it back, but I had to do it.
I did the same thing.
Yeah.
Exactly the same.
It's interesting too, because there are lots of different sorts of bank of mum and dad. There's the money, there's guarantor lending, there's even what I've read recently is being called the hotel of mum and dad, which used to just be called staying at home or being, you know, raiding the pantry all the time. But like the hotel of mum and dad is now a thing with, you know, rules as to how long you can do it and how much you must save, and this is how you're going to get into the property market.
And people having kids and then moving back with mum and dad really, like they really can't afford it now. I've seen a lot of that.
And for the people that aren't like you that did get into the market, you know, in 2013, the older generations are the ones that are holding all of that capital and that equity, so the divide is getting even greater. So the mum and dad bank is actually getting bigger and has done quite considerably over the last 17 years.
Well, we've got to move on. We'd love to hear your stories, viewers, as well. If you want to tell us the mistakes that you made before you were 30 that haunt you for the next 20 years, they can be good ones, actually. I think we got out of that they can be quite good.
Absolutely.
We learn a lot.
We learn.
Thank you so much, Christian.
Pleasure.
From eBay Australia, New Zealand, and Evan Lucas from InvestSmart.
Thanks,
Thank you guys very much.